Hey everybody, it's Will at VIP Mortgage and it's time for a quick rate update. Rates are a little bit higher this week than they were last week. Probably just a little bumpiness in the market. There's a lot of different things going into the mix on which way rates are going and why. It's getting really hard to kind of determine what's going on because the fundamentals, the basic information that goes in to why we think rates are doing what they're doing doesn't reflect exactly what's happening. And the headlines and the news about the economy are very mixed. There's good news, there's bad news. For instance, we got an inflation reading this week that showed inflation was up a little bit, but that was in line with expectations, so it wasn't a surprise. It has been a little bit negative for rates, but it wasn't a huge market mover. The big thing that it might help us get a grasp of what we would expect for next year is the Fed is going to talk about their projections economically. What is GDP going to be? What do they think inflation is going to look like? A few other pieces that go into the mix on how they think the year's going to play out. But here's the thing. 2025 is going to be really different. If the second half of 2024 taught us anything, it's that what we think is going to happen and the expectations for interest rates are a lot more complex than they used to be. And so when we get into 2025, overall, do we expect rates to come down? We do. But if you look at what happened to rates between June and now, we expected them to come down. They did come down. They went up a little bit after that. So that's the nature of markets. They go up, they go down, and if we could tell you exactly what was going to happen, then we would be investing money in a certain way and probably wouldn't have need for a job on a regular basis. So overall, do we expect rates to go down in 2025? We do. How much, how fast, when is going to be the bottom of the market? All these kinds of questions are the kind of thinking that people always want to know. Where's the top of the market? Where's the bottom of the market? How do we know? And when can I make my best bet? When it comes to buying a house, the best bet is when you can afford it and when it makes sense is the best time to buy. If you're afraid of missing out, you don't really need to do that with interest rates, because if they improve, let's say you were going to buy a house in February and then rates go down in July, you can refinance and get a better rate. And so one of the things you want to look at is what kind of deal can you get on the house? Can I negotiate more right now with the seller because rates are stubbornly high? Maybe there's a little less demand. Maybe they're more willing to play ball with me. So all those kinds of things go into it. But keep in mind, if you're worried about missing the bottom of the market, you're not going to do that if rates are stubbornly high. As rates come down, you can always grab a lower rate with refinance and get that monthly payment a little bit more affordable. If there's anything we can do for you, or if we can get you a rate quote for your specific situation, please give us a call at 719-232-7553.